Hey, Forex Fortune Hunters, Tom Wilmot back again. We're going to take a look at the activity, the price volatility in the Australian dollar versus the US dollar from the 5th of July 2019 right through the next week when Chairman Powell spoke to the Congress. In anticipation of that testimony, traders were wondering if there would be a loosening of credit, and as a result, the AUD went down, and then after his testimony, the AUD went up, and so therefore we're going to take a look at how the two templates really handled this so brilliantly. So hang on to your hat. We'll get started right after this. Okay, everyone, once again, we said we're going to cover in this video the AUD versus the USD, and you can see this is on your screen right now. We have an hour-long price chart here, each one of the candles obviously representing an hour's worth of trading in the overnights between July 5th, which is back here, and the following week. In particular, the testimony of Powell was expected during the Wednesday time frame, and we anticipated that with a big move down. Now let's just back up a little bit here and see what's going on. Here's the previous Friday. This was the 4th of July. You can see it's very flat, no activity. And then as we moved into the U.S. session, the AUD dropped like a stone. Now, basically, in terms of interest rate 101, if there was concern that Powell might stand up for tightening and hold the line against a very strong U.S. economy that maybe didn't need any loosening or reduction of interest rates, that would mean that the U.S. dollar would remain strong, and therefore the AUD would fall. So in anticipation of that, you can see there's some concern amongst traders that the dollar is going to be stronger and the AUD is going to fall off. Then we move into the Sunday night area with our hour-long chart, and we move back. We had a little bit of an uptick, but we never took out the trend magic red line. We came down and bumped here. We did have a pullback in the chandelier at this point, obviously, so this was sort of a no trade zone on Monday. And then we pull into an area where we have two red lines, the chandelier and the trend magic both turning red. We're below our band on the RSI, and we have an MACD that's falling. And so basically the situation here is that we pull back to trend magic at the end of the day on Monday, and then we have a reasonably significant decline on Tuesday of that week. Okay, so let's measure our pip count here in terms of this, and we see that we got almost 50 pips down into this area. So that's an anticipation of the testimony, and that's the thinking, in my opinion, that Powell's going to hold the line, and he isn't going to give any indication that the Fed fears weakening, and as a result, they would maintain their current interest rate policies. That is not what happened, however, and we can see right here a huge move higher on the U.S. dollar. As the interest rate policy softens, the dollar, the AUD increases and the dollar falls. So basically, soft interest rate policy loosens up that dollar and makes it cheaper abroad. So here we come. Notice we have a pullback right to the trend magic at the end of the day on Wednesday. Then we have a continuation higher. Same thing on Thursday and into Friday. So we had a big end of the week as the U.S. stock market rallied as well into all-time new highs. Now, let's just double check here and see how well our other template did in this case. I've made a few modifications. I'm calling this simply spooky here. It's just an iteration of the same thing we've had with our GMMA template. Here was our Friday, and you can see we had a significant drop on that Friday, the 5th of July. This was the arrow that signified that our moving averages had fallen below the Zeelander signal line. We pulled back into the bands on Monday. This is a great trade opportunity right here. We're pulling back here on the MACD, but we do not breach either one of these levels. This is a 47 EMA. You could use a 50 for sure. The red line is a 30 EMA. So here we have push back into the bands, a reversal, a rejection, and you can put your stop loss just here a little higher. And that's basically, even on Monday, going to give you this 6 pip risk against, on that day, 25, 30 pip reward, and a continuation into Thursday all the way down to 76 pips. So 6 versus 76 is not a bad risk to reward ratio for sure. Now we come here, best to maybe even get out of the trade at this point until we see what happens. This reversal suggests here that now we have a significant momentum change. We have a crossover of our 12 and 24 EMAs signified by our medallion, our white medallion to the upside. Then we have a continuation above the Zeelander signal line here with our up arrow, and we can pull right into this area. So we have this trade here on Thursday into Friday, and or you could pick this off in this area for sure down here where it's just trending. This is what we called in our book the Zeelander Flytrap Forex trading strategy. This is the area we called dancing on the ceiling, right above that line, just a consolidation before the push higher. But if you'd like to rather hang on here until you get the pullback here, or stochastic dropping down here on Friday before the blast off into the end of the day, we have another good trade here for patient people on the hour-long chart. We got a 45 pip move on that Friday prior to the weekend. So I hope that helps. It shares the ideas of interest rate policy and in the importance to the Forex market, as we discussed in our book, that's still on Amazon, by the way, and also just how our templates, the pullbacks into the bands and the reversal of trends and strategies tend, especially on a 1-hour chart, to give you a significant amount of opportunity as each week comes and goes. Hope that helps, guys. Please like our videos and subscribe to our channel if they're helpful to you. Send us a comment or go to fxfortunehunter.com if you'd like to ask for any of these indicators, and we can shoot you an email and get you hooked up with our Dropbox file location. Thanks for watching. See you next time.